Good morning, traders. Welcome to the Flow Show. Hope you're all doing well this fine day. Morning, K mate. How you doing?
Morning, Ryan. Morning, everybody. Yeah, doing all right. Doing all right.
Good to hear it. Right. Well, not too much on the headline front today, but a ton of data. So that's where we shall start. PMI day today, coming in around the grounds. And not looking too hot at the moment. As you can see there, Australia manufacturing going further into contraction. Same with services as well. Over in Japan, a little bit of an improvement there. Nothing much to write home about though. A couple of pip up, 2 pips up on expectations for manufacturing, a pip up over last month, but still in contraction. Services doing a bit better there, further improvement, 54.3. Coming over to France, manufacturing improving a touch there, 46.4, still in contraction. Services though going the other way, coming in at 46.7, so lower. Stinky numbers for Germany. Manufacturing did improve by 4 pips, but still very much in contraction. And that services number collapsed into contraction there, 47.3 versus 51.5 expected. That's a big reason why the pan Eurozone number has been drawn down there, a little bit up on the manufacturing, but those services getting dragged into contraction on that one. UK as well, another set of stinky numbers. Manufacturing further into contraction, services going into contraction, a bit similar to Germany there, 48.7. So it's really been a case of lower activity across the board, is the main thing from all this. Even with the improvements, still everyone is running into negatives and very few positives around at the moment. What that's done, as you can imagine, is have the markets traders rewriting their expectations for rate hikes, particularly for the ECB, where now the chance for a 25 pip hike in September is now only 40%. And over for the BOE, the peak has now been drawn down to 5.9% from 6.06% prior. Still pretty toppy, if you ask me. Just coming back to yesterday's data in the US as well. Well, it's not on the calendar, never on the calendar. Philly Fed Services Activity Index was down 13.1 versus 1.4 expected. So services number in the US not doing too hot for that one. Put some pressure on the ISM numbers, which I think are next week, if I'm not mistaken. Existing home sales, which is on the board, came in a little softer at 407 million versus 415 expected. Not a huge change. House prices, though, were up 1.9% over last year. So house prices still ticking along, but the rate of gains has been diminishing in all the house price metrics going on there. Right, coming over to some of the headlines, and they're going to be doing some revisions of the NFP, the payrolls, I think today, part of the usual model revisions that they're going to be doing. And if you're listening to JP Morgan, they reckon that maybe 500,000 US jobs are at risk of disappearing from all the payrolls numbers. Now, this is not something that should wobble markets too much, but now we have a sort of expected number on it. It gives us a bit of a benchmark. If it's worse, it may see the dollar losing a bit of steam, the market changing its thoughts small for what they expect from the US jobs market, but it shouldn't make too many waves. But just keep an eye on that. If you suddenly see the dollar making a move, it might be on the back of that one. Over to the BRICS meeting, and we've already started to have some comments coming out. South African Finance Minister Godongwana, if I say that right, Godongwana, says it's premature for South Africa to stop US dollar and SWIFT use. So just going against some of the rhetoric that we may be watching for in terms of what the BRICS countries may do about the dominance of the dollar in markets. China wants to expedite the inclusion of new members into BRICS, so that's going to be the main thing coming from there. There's some 40 other countries who want to join the BRICS, and according to Xi, he wants to speed up inclusion of new members. But we may get some news coming in next week, because Nico was reporting that US Commerce Chief Raimondo visits China next week for talks with his counterpart. So we could get some headlines out of that one. That's it. Look at that. 5 minutes. We're done on the headlines. Unless you've got anything, Kay.
Speak to you tomorrow. Thank you very much for coming.
quickest flow show ever. Oh no, one thing I've missed, and I'll throw that in quickly. The PBOC said its midpoint at 7.1988 versus 7.3050 expected. So another wild miss of expectations there. And last night we launched our own F.A.C.E estimate, which was set at 7.2050. So a mere 70 odd points just above where they actually fixed it, and 1,000 pips better than the experts. So bit of testing to be done on this metric, but yeah, looks like we're doing a better job than they are on the first hit already. So keep an eye out for that coming soon to the wires. Over to you, Kay.
Yeah, mate. Okay, so running through those numbers. Okay, no, let's start with those BRICS, right? Because they could be falling tomorrow, so through the window. Yeah, what I think is that I don't know if it was Xi or Wang saying that they want to expedite some inclusions into the BRICS. We haven't really heard from India or Brazil what they thought about it, because they were mostly against many other countries joining. I guess so. The summit still lasts until tomorrow. I would guess that tomorrow, before the end of the summit, we might be hearing from any joiners and in what capacity they will join. South African President Ramaphosa just said that they will continue discussions on the practical use of local currencies. So that's a bit, as we've been saying before the summit started, that they should not be talking about too much about a common currency. So that's one thing out of the way. And for the rest, yeah, we will have to wait. If everything stays as it is right now, it's going to be a storm in a teacup, and I guess we just move on and wait for data and Jackson Hole. Also, we heard from Ueda going into the hole. People are asking questions about what to expect. I personally would say that since he's been already an over-communicator since he took the seat at the BOJ, I think he will be careful not to say too much over Jackson Hole. But if we look at the combination of the PMIs in Japan, yesterday's again confirmation of higher CPIs. JGBs are starting to push a little bit lower, that is, yields slightly higher. We are slowly approaching that 70 BPs. I'd say we can expect, whether it's into Jackson Hole or at least into the next Bank of Japan meeting, I've got the impression there's going to be a bit of upward pressure on the yen starting to pile up in ahead of all those meetings. Then yeah, the PMIs today, as we say, one bad PMI a winter doesn't make, but it's a bit of a shift, right? Where we saw mainly the manufacturing sector being very weak, we now see rather the manufacturing sector stabilize but then the services, which are in most of the countries ex-Germany the biggest chunk of the economy. So if the services start to falter, that's not a very good sign, right? And of course, psychologically, this UK PMI getting back into or getting into negative territory we'll see sterling rather move now from buy the dips to the sell the rips currency for a while. Those are my like initial thoughts of the day, and we'll look at the prices then later.
Yeah, thanks, mate. Right, Ali's popping up with a question talking about UK stagflation and 400 to 500 pip haul in cable. We're now 140 pips down today. What about next? Okay, back to this one. Right, well, let me tell you straight off the bat. Okay, I don't care for pip amounts. I don't care for targets. I don't care for filling the bucket with hauls of pips or whatever. Okay, if you want a trade that's going to run 400 and 500 pips, it's got to break your levels. All right. So, you know, take one example, dollar CAD. I got in a trade 131.50. I'm 500 pips up on it. Did I expect to get 500 pips up on it? No. All I did was ride the trade as far as I could ride it, and I'm still riding it now. I don't care about targets. What I care about is where is the price going to run into trouble, because that determines where I take profit, where I may add to a position. So whether this one carries on going, dollar CAD goes up another 500 pips, I don't care. I'm not interested in pip amounts. All I care about is what does the price do. At the moment, the price can't get through 35, 70, 80. So that's my boundary. That's why I shaved more off my position, because the price can't get through this level. If it gets through this level, fine. It might go 10 pips. It might go another 1,000 pips. I don't care about the pip amount. All I care about is what is the price doing. If the price starts coming down through 135, then that suggests that this move is over. That's all I can do regarding what to do in my position. So it's okay. You want to talk about 400 or 500 pip moves, fine. Know what cable's got to do to get you a 400 or 500 pip move. Okay, if it's going to move another 360 from here, it's got to get through 126. And if it's not going to get through 126, you're not going to get your 500 pip move. Same way on the top. If it's not going to go through 128, 128 and a half, you're not going to get 500 pips to the upside. So it's not about your pip numbers. It's about trading the price action. If you're in a trade and you're riding it, then know where your trouble points are and know how to react at those trouble points. If you want to short it for 500 pips, fine. But what are you going to do if it doesn't get through 126s? Are you going to keep holding on? And what about if it's at 128? Are you going to keep holding on for a break of 126? So forget pip amounts. Worry about what the price is doing. And if you get a trade that moves in your way, the idea is to stay in that trade as long as possible. 131.50 I got in dollar CAD, or 131.52.4 to be exact, if you want to look at that, Ali. But I had no targets. I didn't care whether it went 100 pips, 300 pips, 1,000 pips. All I worry about is trying to keep the trade as long as possible and then trying to see if I can eke out the pips from it. But I'm going to manage that as it goes. Now, speaking of cable, it's done its usual thing. Looking at euro sterling, we had a little break of the 85 handle, but it sat right in the zone. I was bid into that zone and down into 90. The 90 order missed by 2 pips, unfortunately. But what we saw is obviously the Eurozone data coming out first and really hitting the euro, particularly Germany, caused that move under 85, but it didn't last. And then obviously the UK data coming out stinky as well brought the pound sellers out. Now, as usual, we've got the usual volatility difference between the pound and the euro, i.e. the quid cable moving more than the euro has. So that's been a bit of the reason why we've seen a decent bounce in euro sterling. I don't think by any way, shape or form this is out of the woods yet in this move down to 85. I don't think we've fully resolved what's going to happen down here just yet. The reason being the Eurozone going into negative numbers or activity falling is going to outweigh negativity in the UK. It's a bigger block. So what happens there is going to have the bigger market impact. But on the flip side, as we're talking low activity, everyone's going to be talking about rates. That means rewriting further hike expectations, which, as mentioned in the headlines, have all been drawn lower. But it also puts the pressure on who might be cutting first. And as you know, I've been saying that the UK is probably most at risk for having to cut faster than the others due to the height of interest rates, which are still set to go up. So you're going to see more choppiness. So even if Eurozone data is bad and UK data is bad, from an interest rate perspective, you're likely to see the pound suffer more than the euro. So for euro sterling, that probably means euro sterling going up. Doesn't mean it's going to rocket back up to 90 or anything like that, but it just means it's either going to not fall as much, or if UK data is worse, we're going to see this rising as well, and you'll see cables suffering more than euro dollar. So that's where you'll get your differentials coming in for that. So for now, euro sterling, I've got into some additions down here. 85.05 already had the slicer out, half the position off at 28, a bit more off at 43s. I'm not going to hang around taking profits for this one. Again, going back to your example, Ali, I'm not looking for 400 or 500 pips at the moment. I'm looking for it to get above 85.50. If it gets above there, fine, I'll see what happens after that. But if we can't get above 85.50, as I say, I don't think we finished messing around with this area down here just yet. Euro dollar down through the zone, found support at the bottom of the zone around the 30s, as you can see there. Previous action, I keep banging on about this zone. It's been on my charts for ages, years. Now we're down testing the big figure, towards the big figure. That's going to be your next level. The bigger level under that is going to come in round about the 107s, and there are levels 107.60. Obviously got this trend line coming up as well from earlier this year, but the big old level, next big level for me is down around 107. Get down there, we may have something on, and that might be a bit of a stretch point for this move, but as you can see, the trend from 112s is still in play. It's still pretty bearish, and there's no reason to change that. The bounces are coming in lower, the lows are going lower, so there's no reason to change this format just yet. But yeah, 107 is sort of area where I might think that might be somewhere where we at least try to put in a bounce of sorts. Going back to dollar CAD quickly, just to reaffirm again, as you can see, we are banging our head around these highs again. So there's something is going to happen. We're getting a few more tests on the upside now than the downside. So although I cut out my 135 exposure yesterday when we got this move, I might be looking at adding back on a break if we get one. I'll have a look. It's been a pretty strong run, and I'm aware that all things come to an end at some point, but we shall see. If this does kick on through here, then it's probably going to be 136 pretty quickly, if not a bit more, but it's still in the balance what we do here on this one. Kiwi, have a quick look at as well. Another one I'm in. It's if I can find it, there it is. So it's come down to a bit of a shorter term chart there. So it had couldn't get through this 60 area and hold. Had a couple of goes yesterday, couldn't get through it. This is still only really a minor level. So the fact it can't take out this minor level, you know, suggests that again we're not finished with the downside and not finished with the big figure down at 59. Messing around this intermediate level at 42, 43, that's a bit washed out now, so I'm going to ignore that. So we have to see where the next level wants to set itself before we get another test down here into 59s. But again, it's a wait and see game. Either we're going to break this 60 area, that'll give it the legs to push up maybe to, you know, 60, the big figure. If we don't, then we may have another test down here. I'm still running sell stops on this one if we do break through on that. Same as I'm actually doing with Euro Sterling, running sell stops below the zone on that one. Kay, do you want to have a little poke around with your pokey stick?
Yeah, sure, mate. Right. I'm going to show a couple of the same ones because my pictures look a little different.
Yep.
Euro dollar to me has now broken outside of this wedge outside of the below the the prior lows, 33.40 was a bit of a support. I also have this one on that you have on your picture, Ryan. But I think there's an interesting one here that we had in the run-up of the euro. We had this stop, and then we had the last push higher in several waves. If you draw a simple line there, that held when we tested the 106.30s and then jumped from it, and that's going to come in around 107.25 today. And if of course we have to look at the US PMIs as well, because they are coming out this afternoon. If they get a kick in the teeth, we may just reverse everything that we've done today. But before that, there may be some more washout coming in the euro. Around here, 107.2025. It's not too far from your 107s. I think that's going to be a big test level for the euro. Indeed, and I'm going to see what I'm doing with my own positions. Yeah, as people in the room know, I'm still running a little shorts. I've been jumping them in and out, but I'm just a little bit. See if we can get down there. If we start to get back above this one here, 108.75, I'm probably going to leave the boat, and because that's perhaps that the US numbers are starting to falter too, which should not be coming as a surprise, because a lot of stuff is running exactly at the same pace as we have seen over the past weeks or months, even yields. Cable is looking fragile. Okay, 126.80 was a level that we've always been watching. It was a bit of a trend line. Yesterday, I thought we could have pushed through a little bit, but then the US yields continued to push, and the dollar actually did pretty well during the day yesterday. Okay, sterling for me now. I've been for quite a while. I've been pretty positive towards the sterling, because data-wise, expectations-wise on the interest rate front, and etc. Everything was looking a bit rosier for the sterling than other currencies, such as euro, such as the Aussie, such as yen, for instance. But I think this number is scaring the markets just a little bit, and we may be seeing more people needing to get out of positions before the day is over, or the week is over. I'm saying the day is just figurative. Because I think a lot of the market was thinking roughly the same as I was, and if people need to rethink their opinion, which I'm doing now, I think sterling has now rather gone into a sell the rips than buy the dips pattern. And on the sterling, it can get a bit emotional, and it can get a bit fast. So I wouldn't rule out seeing a bit of a further drop in sterling pairs. And remember what we talked about a lot as well is that what was holding up the euro and what was holding up the sterling is not only cable or euro dollar, it was a lot of the crosses. And if you see a currency where people start to lose a bit of confidence, even if the dollar is not your best instrument, or if the dollar is not behaving well, cable can still go down, because you need to sell sterling yen, you need to sell sterling Aussie, you need to sell sterling whatever. If you look at the euro sterling, for instance, we've had that test of 85, as Ryan was already mentioning. Nice scoop down there, by the way, Ryan, well done.
Thanks, mate.
And and then we had the sterling numbers, and the result is that we're actually higher in euro sterling than when we went into the data this morning before any of the European data. So that's where you see that even if the data run together, the euro and the sterling, you can see a lot more weight, for instance, on the sterling, because people need to get out of positions, regardless what the dollar pair does somewhere. And so on the sterling, yeah, we obviously this is a double bottom in this 18.25 zone on the 18.28 on the sterling. It's a support. And then we are looking at the prior low here, just below 126. And this is going to be your test area, right? Either you visit it, which we are seemingly on the way of doing, and break it and go for a little test below 126. That could be on those US data this afternoon if they in turn hold up a bit better. But that's going to be your test here for the cable, right? To keep it simple. And if cable ever breaks, then it's going to drag all the rest with it. All those crosses are going to go lower as well in the sterling. So that's your first area. Top side.
I don't know if you've got it, mate. I've got I've got two fibs in play here for this one. I've got the fib of the May leg higher.
This one?
Yeah, and then the one from back in March. I've got those coming in 26 and 28 and 30, 27 and 30. The 38.2 fib of the March and the
this one here,
61.8 the May.
Yeah, it's a little let me hide this one. Perhaps it's going to come clearer. Yeah, 35. Yeah, so the whole zone down here, right, is going to be important. But I reckon psychologically, this one, because it's a kind of a double bottom, and this one, 125.90, people may throw in the towel if we get down there. And let's not forget, we are trying to enter back into this prior channel as well, and that comes in around 126.82. So you're going to want to watch that 126.80 for the close, you know, of the day or the next couple of sessions. And so I'm just showing what's happening. Ryan already showed the euro sterling, so I'm not going to come back on it. But there's one where I was in for quite a while, and this one is now looking a bit shaky, right? This trend line came in at around 197, 197.10, and we are below. So this is an additional weight. I think at least a good few people in our room, including myself, we've been long. We've been long on the way up. But then I was like monitoring this one. I got out a little bit earlier because I bought it a slightly bit too high yesterday. In the 198, so I let it go just as the numbers came out. But this one is starting to look a bit fishy. Okay, this sterling Aussie back below 197 is not a good sign. Another one that is starting to look fragile. We are still in a very much in a move higher, but setbacks. Okay, and this is starting to look like a real setback. Sterling yen, and then brings me back to what's happening on the Japanese CPI, what's happening on the PMIs as well, which in turn in Japan came out better than expected. Okay, the manufacturing still below 50, but no dramas with just below. But the services is keeping quite strongly above 50 as well. So this one now here, 184, we're trading a little bit below. There's a possibility we are going to see 182.5 in this if this continues, especially that that dollar yen as well was respecting very well that 146 mids the other day. Again, brings me back to this one. Now we will have to look at the underside, and that's looking a little bit ahead to the US PMIs. If there's any weakness in there, I think there's a fair chance we are going to break below. Get stronger US PMIs, then it's going to be seemingly the European, pan-European or big European zone, including including Europe and sterling, which had the weaker PMIs today, versus the rest for a while, in my opinion. Okay. So watch your 145 on dollar yen. If the US numbers come out weak, could be your gateway to quite a bit lower, and this could be a relatively fast move if it breaks, in my opinion. Okay, that's US PMIs. I think ahead of the US PMIs, I don't see it really happen, but the US PMIs could be your clincher here. Metals are defying the laws of gravity, but Again, if we see a bit of a slow one on the US PMIs, I think silver has a very good chance of breaking above this zone here. This is what I highlighted: 70s, 2370, 2380. Now that we are above this 2335 zone, this is going to be your underside first port of call, I would say. If we get back below, that means probably that the US PMIs are really good. But being an industrial metal, I think gold would be heavier than silver if the US PMIs beat. If in turn they show a bit of weakness, but not too much, this is likely going to get back into the 24s on silver. Why not 2460, 2490, close to the 25 zone? Gold is trying. It's 1900. It's above 1900, but we are just there, you know. We need to get back above 1910 to confirm, and then I think we can push up a little bit higher again into this 1925-30. Bigger zone will be in the 1940s right now, but it's trying to hold. Bit in line with silver, but less impressive than the silver move. That I think could be heavier on a good US PMI. Now, pop-up, I'm just reading. Big futures have their stops because they cannot reverse positions. Oof. Okay, I'll let you handle that one, Ryan. I know the answer, but it's probably an answer for about an hour. That takes about an hour. S&P, it's putting up a fight, right? So we have like two possible things here, and this one is probably watered down, but we trying this little triangle, the channel. I think we're in a bit of a range play right now, and your upside is 44.40, 45, and then 44.60. Back above 44.60, I think this will look a bit more impulsive. This trend line, I think, is a bit of I don't know whether it's really still valid. On the underside, the levels are starting to get a bit clear as well. 43.60, 65, 43.50. And for me, the point of no return is here, 43.30. Break below 43.30, then I think there may be another 2-3% in this, really. But therefore, we need actually, which is quite funny, because I don't like to say things like that, because if you get really good numbers, why would stocks go down? But it's going to be a case of finding a break level on the rates, right? And we are not too far from it, because we are banging our head in the US 10s against the prior highs. Okay, we've come off just a little bit, but if this goes up more on strong PMIs, then we are going to go into some really difficult zones. Some people are calling for the 5%, right? I don't know if we can get there, but just know that we have 20-year and 30-year issuances. The 20-year bond auction is today, 30-year tips are tomorrow. That's going to be another test for those yields here, right? We're really at lofty levels in the 20s for sure. I don't have a far enough chart. 30s, idem ditto, but in the 30s, we are not yet completely back to levels where we were after the GFC. So we still have a little bit to run, but we are at fresh or near those highs, right? So this is going to be a test later tomorrow. Tomorrow, this is going to be your test for the 30s, okay? Yeah, I need to mention this one, right? Euromex. It's heavy. It's got another knock on the head through those CPIs. I think we have to target 18, right? We have to target 18. This is your 78.6. This has gone further than a lot of people thought, in my opinion. But who will? We need risk to really roll over and get very bad. for this to start to turn around. Dollar mix as well is firmly below 19 again now. I think this one, yeah, it's really still a bit short of it, but I find I'm perhaps not short enough because it's really breaking down again, you know. And as I said, the next level could be 18. And since we are Wednesday and we get 3 days of funding weekend, I hardly see how this thing is going to run up through 35, 45 again, just on the day, unless we get really bad US PMIs, then because the MEX is going to react to US data as well, being its manufacturer. And I leave it there for today. Back over to you, Ryan.
Thank you very much, mate. Forgive me, Ali, if I'm not getting you specifically. Do you understand what he's asking, Kate? My brain's a bit fuzzy this morning, I think.
Speculators, bankers move strong levels, their stops hit, and we get our entries there because they don't have enough liquidity. It's such a big subject. Put your entry where big fish have their stops. How will you know that? How will you know where the big fish have their stops? Because I've been trading and I've been market making and I've been trading with really big entities in the world, but you never know where their stops are. Okay, you can speculate that their stops will be below big fibs and such as 38.2, 61.8 kind of things, because the rest, if you look at F.A.C.E, for instance, the 78.6, the 23 point something, that is something that F.A.C.E people invented. I don't think that asset managers or big fish, they have like, okay, if you talk about model funds, they will have reversal levels, and there you can talk about Fibonacci, I reckon. But if you look at asset managers, if you look at the big money managers, they look at a basket of stuff that we can only try to replicate, because they will look at yields, they will look at PMIs, they will look at currency moves, they will look at stock moves, they will look at bond moves, and then they make a basket out of all of this, and then they decide to go into trades. For us, it's just too complicated actually to replicate. So yeah, I mean, Angela, you're saying they need liquidity to get in and out positions, but the thing is, do we know where FX liquidity is? We as retail traders, we have our platform, right? But the platform that we use is just one little sample of liquidity in the market. You can't imagine the liquidity that goes around into platforms like 360T, the big interbank, the big intermarket platforms. You can't believe. I'm going to give you just one example, and that's about, I'd say about 15, 10, anywhere between 10 and 15 years ago, I reckon it is. I've been a market maker in yen for 19 or so years, right? And I had one of those big customers, and he needed to buy $1 billion yen, and we went in slowly. You know how much it took in pips for me to buy $1 billion yen? Have a guess. I want a few guesses there. In pips, how many pips did it take me to buy $1 billion yen?
How many decimal places are you giving it?
1,000 pips, 100 pips. In dollar yen, 1,000 pips. You mean 10 big figures? No. That's a bit rich. Okay. All right. I'm going to give you the answer. 1.5. 1.5 pip. Can you imagine? I've started to buy, if you take today's rates, at 145.50, and I stopped at 145.50, 1.5. That is the liquidity that you can see on some of those platforms. It is unimaginable for us retail traders to imagine what's really going on in the world. I mean, more than $5 trillion are being traded in all the different assets. It's actually an interesting question to talk about on the Flow Show. But if people talk about there is no liquidity, it's a concept. For us, no liquidity is, yeah, we may miss a stop loss or we may miss an entry or something. But I mean, if the big boys, and the big boys usually don't place stop losses, they decide when they get in or out of positions. It's very rare when I can only remember just a few people. They can set alert levels and call levels, yes, but they rarely set really stop levels. But yeah, I mean, at one stage there is a lack of liquidity because they all look at the same basket of stuff and then they all want to move out at the same time. Then you're going to have a problem of liquidity, but that can last actually for days, not just a few hours or a few levels, you know. Okay, that's just in between.
Lovely. Thank you very much, mate. Very informative as always. Yeah, I mean, Andrew's got half a point. To gauge where the market price might be drawn to next. Yeah, that's a fair idea. If you've got a big level showing up, can I just nick the screen back quickly?
You can take it. I stopped sharing.
Yeah. See that okay? Yeah. So, you know, the only way we can really see where liquidity is or where the price is by what happens at certain levels. You know, looking at this cable and down in these low 126s, you know, we've had big moves down there and big rejections from the level. So, you know, there's something going on down there that's stopping the price from going any further. So, you know that, you know, these are probably people who are far bigger than us trading this. So, you know that if they're going to have stops in play, if they've been buying each time we get down here, they're going to have stops somewhere below here, be it below this next point, the big figure, wherever. You know there's stops below there. So we don't know. Okay, we don't know if there's, in the old days, a few years ago, we'd get a bit of insight as to, you know, so there's stops here, there's stops there, and it gives us something to focus on. But that's just one snapshot of the market. So all we can do as traders is react to it. Now, if you want to buy down here, you've got enough evidence to say why it's a decent support area. So you go with longs, but you would know that if we do break, it has the potential, doesn't mean it's going to, but it has the potential to run quite significantly lower, because every time people buy here, the stops get bigger down here. So if it does break, you know you're going to get a reaction. So if you want to trade a break, play a break trade, like I do quite often, you want to put your entry where below the line of last resort, if you like, for all these longs around here. And if you catch that, and if it works, then you get a decent move. Maybe it goes down to 125.5, whatever. I'll be happy if it goes 20 pips. It's all about working out how to capture a move like that, a price action move like that, where longs down here get tipped out the market. If they're big, you get a big reaction. If they're small, you get a small reaction, and it might fake out and it might reverse. So if you're trying for a short trade, a break trade, you'd have your stop not too far above the break level, because you want to protect it in case stops get tripped and then someone comes in and goes, thank you very much, I'm going to hoover that up after all the stops have gone. So you have to be careful, but that's what you look for. Would I trade it on a 15-minute chart? No, because the risk reward isn't there. But would I trade it on something like this, where we've had several weeks where a level's strong? Yeah, I did that in dollar CAD all the way up, 133, 134, 135. I traded break additions to the trade because the price action said we're not getting through here for a period of time. We're not getting through here for a period of time. We're not getting through here for a period of time. So when we do get a break, boom, off it goes. And then that's what I'm trying to capture each time it happens. That's why I traded it here as well, 135.15, to try and capture some of this move higher that we did get, but it's been a bit wishy-washy since. So that's where you look at it from. We don't know where the stops are. We know where our own stops are, but we don't know where everyone else's stops are. But you can look at the price action evidence to say, well, we're not getting through here. Every time someone sells it up here, potentially their stops are getting bigger if it breaks. Gives you a bigger flash through. That's all we have to do to try and trade it. And break trading isn't something that a lot of people look at, and I think it's something that people need to put in their armory for trying to capture moves. But anyway, good subject. Maybe we'll touch on it a bit in more detail at some point when it gets a bit quiet, perhaps. Thank you, Kate, as always, for your valued insight. 1.5 pips for $1 billion yen. It can move though, can't it? That amount. It depends. You know, if you try and do that in the dead hour between US and Asia, it might cost you 10 pips or something to do a trade like that. So it's all where and when these things happen. You know, nothing's ever set in stone, but it just gives you an idea. 1.5 pips for $1 billion yen makes a bit of a mockery in our little mini lots, eh? Anyway, thank you everybody for coming to the Flow Show. Have a great day. Watch those BRICS headlines and the rest of the data. We shall see you all tomorrow. Thank you very much.
Thank you, guys.